Hey friends, welcome back to the channel. I'm Iggy from the Investing Iguana, and today we're diving into something that's making waves in Southeast Asia's financial markets. If you're new here, I cover everything from stocks and finance to retirement planning and wealth building strategies. The Investing Iguana is currently ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've created more than 700 videos with over 300,000 watch hours as of December 2024, and I love breaking down regional and global economic trends for you all. So what's the big news today? Indonesia's currency is in trouble, and it's bringing back some uncomfortable memories for the country. The Indonesian rupiah is flirting with record lows against the US dollar, and investors are getting nervous. Why should you care? Well, Indonesia is Southeast Asia's largest economy, and what happens there can ripple throughout the region and even impact global markets. Let's break down what's happening. The rupiah is hovering dangerously close to 16,580 per US dollar, just shy of its all-time low of 16,800 that it hit back in June 1998. For those who might not remember, 1998 was during the Asian financial crisis, right after the fall of Indonesia's authoritarian leader, General Suharto. That was a dark time for Indonesia's economy, so these comparisons are making a lot of people uneasy. Think of a currency, like a country's credit score. When investors lose confidence, that score drops, and everything becomes more expensive. That's what's happening to Indonesia right now. Just yesterday, the rupiah hit a post-crisis low of 16,640 before the central bank stepped in to defend it. Imagine your car rolling backward down a hill, and the central bank is desperately trying to put on the brakes. That's essentially what's happening with Indonesia's currency right now. But why is this happening? What's causing investors to lose faith in Indonesia's economy? The answer lies largely in politics. Indonesia recently elected a new president, Prabowo Subianto, and his economic policies have investors worried. It's like when a new CEO takes over a company and starts making dramatic changes. Shareholders get nervous until they see results. Pauline Ng from JP Morgan Asset Management puts it bluntly. Sentiment is very poor, whether you're looking at equities or the rupiah. With the new administration coming in, there was a market expectation that it would be business as usual. Miscommunication and some of the policies have led to uncertainty in the market. Let's put this in perspective. The rupiah has lost 3% against the dollar this year, making it the worst performing Asian currency. That might not sound like much, but in currency markets, that's a significant move. It's like being the slowest runner in a race where everyone else is sprinting ahead. The stock market isn't doing any better. Indonesia's benchmark index hit its lowest level in over 3 years on Monday. There was a slight recovery of 3.5% on Wednesday, but that's happening right before a long holiday. Indonesian markets will be closed from Friday until April 7th, which means investors are positioning themselves before this break. Now let's talk about what's really making investors nervous. Prabowo's spending plans. Prabowo has promised to provide free meals to more than a quarter of Indonesia's population. That's a massive social program that would cost about 71 trillion rupiah, or 4.29 billion. Think about it. Feeding over 65 million people isn't cheap. While this sounds great for the people who would benefit, investors are concerned about how Indonesia will pay for it. It's like if you announce to your family that you're buying everyone new cars without explaining where the money is coming from. They'd be rightfully concerned about your financial planning. Indonesia has worked hard in recent years to build a reputation for fiscal prudence. They've been careful with their spending and managed their debt responsibly. Now, investors worry that this new spending program could undo all that hard work. Adding to these concerns is the launch of a new sovereign fund called Danantara Indonesia. Despite Prabowo's assurances that the fund could be audited any time and by anyone, investors are worried about potential political interference. It's like telling your friends they can check your work anytime, but they still don't trust that you're doing it right. There's also an uncomfortable historical parallel here. The rupiah's previous low point in 1998 came during the collapse of Suharto's 32-year rule amid mass street protests and an attack on Southeast Asia's highly leveraged economies. Prabowo was Suharto's former son-in-law and a special forces commander under his rule, and now he's expanding the military's role in government. These echoes of the past are making some investors very nervous. The numbers tell the story. Foreigners have pulled more than $2 billion out of the Indonesian stock market this year. That's a significant vote of no confidence from international investors. What does this mean for Indonesia's future? According to Aninda Mitra, head of Asia Macro Strategy at BNY Investment Institute, the Rupiah will remain relatively fragile until there's greater clarity on the specifics of fiscal needs and sources of funding, and how these will affect growth. Think of it like this. If you're planning a major home renovation, but haven't figured out how you'll pay for it or how it will affect your daily life, your family would be right to worry. Indonesia needs to provide that clarity to reassure investors. So what can Indonesian authorities do? Mitra suggests they may need to utilize a broader array of tools over a longer period of time to smooth any adjustment in the onshore rupiah market. In simpler terms, they need a comprehensive strategy, not just short-term fixes. Let's take a step back and consider what this means for the average investor, even if you don't have direct exposure to Indonesian markets. First, this situation highlights the importance of political stability for economic health. When a new administration comes in with ambitious plans but unclear funding strategies, markets get nervous. This is true whether we're talking about Indonesia, the United States, or any other country. Second, it shows how quickly market sentiment can change. Indonesia was seen as a relatively stable emerging market, but concerns about fiscal policy have rapidly shifted that perception. This is a reminder that in investing, things can change quickly, and diversification is key. Third, it demonstrates the interconnectedness of global markets. Indonesia's issues could potentially spread to other emerging markets if investors start to worry about similar problems elsewhere. It's like how a cold can spread through a classroom. One economy sneezes and others might catch the chill. For those of you who are interested in emerging markets, what should you do with this information? If you have direct investments in Indonesia, you might want to reassess your position based on your risk tolerance. This doesn't necessarily mean selling everything. Indonesia still has strong fundamentals in many ways. But be aware of the increased volatility. If you're invested in emerging markets more broadly, keep an eye on whether Indonesia's issues remain contained or start to affect sentiment toward other similar economies. Sometimes these situations create buying opportunities in markets that get unfairly punished due to regional concerns. And if you're just an observer of global markets, use this as a case study in how political decisions impact economic outcomes. The promises politicians make can have real consequences for currencies, stock markets, and ultimately, people's livelihoods. Looking ahead, we need to keep our eyes on several key indicators. We should watch how Prabowo's administration clarifies its funding plans for the free meal program and other initiatives. It's also crucial to monitor whether the central bank continues to intervene to support the rupiah and how effective those interventions are. We'll need to track if foreign investors continue to pull money out of Indonesian markets or if confidence returns. Lastly, Indonesia's economic growth performance in the coming quarters will be a critical factor to watch. Remember, in investing, information is power. By understanding situations like this, you're better equipped to make informed decisions about your own portfolio. Before I wrap up, I want to remind you that while this situation in Indonesia looks concerning, it's also important to maintain perspective. Indonesia has weathered economic storms before, including the much more severe Asian financial crisis of 1997 to 98. The country has more tools at its disposal now than it did then, including larger foreign exchange reserves and a more experienced central bank. That said, the parallels to 1998 are a reminder that history doesn't repeat, but it often rhymes. The best investors are those who learn from historical patterns while recognizing the unique aspects of each new situation. If you found this analysis helpful, please hit that like button and subscribe to the channel for more insights on global markets and investment strategies. In my next video, I'll be looking at how currency crises in emerging markets can create both risks and opportunities for international investors. So make sure you're subscribed so you don't miss it. As always, this is Iggy from the Investing Iguana, helping you navigate the financial jungle one video at a time. Thanks for watching, and I'll see you in the next one.